Caffeine is supposed to be a hell of a drug. It's supposed to stimulate your mind and your nervous system. But in today's video, I'm going to show you how it gives you energy to trade God mode when you're going for that trend trading capability. Like this video and definitely subscribe to this channel. And I'm going to show you a new version of the Stochastic RSI, which beats all of them. So watch this video all the way through and let's get into the coffee shop. Welcome to the coffee shop, everybody. This is your host and barista Eric, and I'm here to let you know about another new tool that I just released, the Trading View. It is the Stochastic Caffeine Crush. This thing is awesome. Let me just kind of break this down to its base, and then I want to show you what is so special about this new indicator. This is the Stochastic. I have put extra tools inside of it. So let's go into the indicators, and what I want you to do is look for Stochastic. In the community scripts, you're going to see two of them. One is the Stochastic. This is the base level one. And then this is the Stochastic plus Caffeine Crush. It is a version of the Stochastic, but it's on steroids. I wanted to allow you guys to have either or of these. One comes with divergences and an energy histogram. So of course, type in Stochastic. For the purpose of the video, you're going to put on the Caffeine Crush. You're going to put that into your favorites. You're going to add it to your chart. Do me a favor, hit this little thing back here and hit that boost button. Just join in on the fun. Like this video and subscribe to this channel because you know I'm going to be offering you guys something really cool. You add it to your chart, you add it to your favorites, okay? I have a few other indicators on my screen. We'll talk about that in another video. I think right after this, I'm going to record another video talking about all three of the indicators that are up here that are being combined. We'll talk about that later. So you know why I created this Stochastic. I will admit it 100% of the times. Using the Stochastic RSI, I was really horrible, but I very, very much wanted to be able to use it. It's really about the visual aspect of it. It looked horrible. Two lines or even a fill between those two lines, and they bang into each other when they're ranging, when they're spiking down or spiking up. It's hard to see what they're doing, especially when you set them correctly. I created a version called a Heikin-Ashi version of the Stochastic, which is the Stochastic Hiking Ash. So now these colors and candles actually smooth the movement out very nicely. But I always believe that there are times it dips low. People say you're supposed to dip low, right? And then you're supposed to catch the uptrend move. Okay, it's green, it's moving into an uptrend, but why doesn't price move anywhere? There has to be something else going on. And what I realized is that there are these energy waves inside of these moves. I created a histogram and put it into the background that measures the energy of the curve. If there is not enough energy, then the price will not move up. And that's basically what's happening here. So let's put on that histogram real quick. And now you can see as this came down, the market actually entered into this pause area. These purple pink lines, these are pauses in the move. And these pauses are really, really powerful. They will help you stay out of a bad move, out of a range. For example, you have a downward move here, changes to green, but you're still inside this pause. Do not take this. It's still red. Don't take this. Now it's green and it's lined up. You can take this, right? What I also realized is that the movement of the energy wave has to match the movement of price. When it does, then you have your move. But when it doesn't, if price and the energy movement are lagging too far behind each other, you have a divergence. Whether it is a hidden divergence or a regular divergence, you've got one or the other. So let me tell you real quick about divergences, right? And then we'll get into how to use this. First, we'll talk about hidden divergences. This is measuring the divergence of the energy wave, right? Versus the closing of price. And you can see that it's marking this close and this close. This close is higher than this one. It's a hidden divergence, which means price is going to continue moving bullish as long as you are already in a bullish move. That being said, this should be a bullish move now, even though you get this divergence. And people are looking at the, Heikin-Ashi, the Stochastic with the energy wave down. They're like, oh, I want to catch this move down. No, don't do it. I get this bullish move here, right? And my price is still below the moving average. Then it's above the moving average, right? I'm closing above. I get my green candles and my green histogram moving to the long side. So this is bullish energy, positive bullish energy. And this is the stochastic moving up. This means that the RSI and momentum are moving up. And I'm doing it coming out of a hidden bullish divergence, which is supposed to be a continuation of a long move. So if I look at my chart, I've got a high here and a high here, right? Those are the most recent swing highs, okay? Then I've got lows moving up here, and I've got the beginning of some lows moving up here, all the way to this break of the moving average, right? And the movement of the upside. So I've got these little movements saying, hey, it's time to go long. And then what happens at that point? Let's see. Price continues to the long side. You have to have your confluences. Now, you need to be in a trend. You have to be in a trend. For example, here, right? You have this uptrend taking place. You get a hidden bullish, which means you can continue to move to the long side when you get green momentum telling you that it's moving up. So you get a hidden bullish, you have higher highs, higher lows, right? You can see it right here. There you go. Higher highs, higher lows, hidden bullish. Wait for your price to come below the moving average. Get green on top. Take your move because you are above your moving average. Here's my entry. There's my swing low right there. The RSI value, the triple tells you the RSI. It's over here. It's a yellow number right there. But the RSI value is 6.22, 2.62. Let's go, 2.62 pretty much. And that brings us pretty much to this level on the support and resistance. We got a dip here, dip here, dip here, right? What it actually brings me to is roughly this liquidity level in the market right there, that line right there, right? Brings me to that point. I would trade to that liquidity because it's the only thing in my way. Let's see what's going on here. So you get another hidden bullish, right? Another hidden bullish move right here. We had the first one here. You get another one right here. So what are you waiting for? Well, you simply wait for your green setup. Your green here, your green right there, just a little bit. And now your new setup is right. And again, it gets you in at a premium price. Premium price means when you're bullish, you're getting in at the low. When you're bearish, you're getting in at the high. Hidden divergences are continuation moves. You need to know what your trend is currently, and you only accept those moves. So if I'm in an uptrend, I want hidden bullish. If I'm in a downtrend, I want hidden bearish. Okay, here we go. Wait, kind of bring this down here. So this is a bearish candle. So I get in at the close because on the close, everything is green. I'm above my moving average. I'm above support and resistance. I get in for this. Okay, let's try an RSI formula this one again. Go right here. My swing low is now down here. My RSI formula. Oh, wait, sorry. That's not the swing low. That's the swing low there. RSI is 1378. That's 1 to 3 point. Oh, was I right the first time? It's right there. Yeah, 1 to 3.37. I'm already there. Pretty close. 1 to 3.37. There we go. There. Brings you in right here, gets you out right near that liquidity and right near that pivot. Awesome, right? So that's a nice little move. This is the safe exit. The RSI formula always gives you the maximum of the move, and that's where you want to get out. Well, you don't want to get out there. You want to get in where it's appropriate to get out. So just want to let you know what these hidden divergences are for and when do you actually take them. Because you can have a divergence indicator on your chart. It will plot the label and people will start taking the trade, but they will fail. They will fail, okay? For example, here too, you get a hidden bullish divergence right here, right? Hidden bullish means that you were in an uptrend. If you look at this incorrectly, you're gonna say, oh, I got an uptrend here, I've got a high and a higher high. But what you're not taking into account is that you have a lower high right here, right? You've got a lower high that took place before this label, even though you have higher lows up to the label. So just, you gotta analyze your market appropriately. You need to know if you are trying to enter just before you hit support and resistance or a pivot level, you do not enter. That is like a roadblock and you're not going to enter right at it. Okay, so you get that little marker right there. Your price is closing above, but your Stochastic is not telling you to enter. You get a pause, You go green, right? You're green here. Here we go. Where's price? You are on the low side. You're inside of a resistance area. You are underneath your moving average. You do not take this trade, and especially because you have lower highs and lower lows. This is when this would be a failed move. You do not take this trade. Do not take it. So this is where you start looking for your other divergences, right? So we got bullish, regular, bearish right there. So this says take this one. Your price is below everything. So just kind of look backwards. Bearish divergence. All right. You could have entered here. Nope, you can't enter bearish here. You're above. Wait for it to come down and your price and everything to be below. You're red here. You're red here. You're closing below. This would have been your entry. So this is one of those moments where you could actually look backwards in time and say, hey, where was my actual entry? Do I still have any movement left in the market, right? So let's pull a short. Let's go here for the movement. Let's go to an actual swing high, which is right there. This is a 1 to 2.09. 2.09, right? Let's go. That's right here, 2.09. And that is the entire move right there. That brings you right back down to this support and resistance level that shows up in the triple when the long-term and short-term resistance hit each other. That is support and resistance. And you can see what price did. It came down and went straight to that area. There you go. So this is a nice little setup. This will help you a lot. I want you to pay attention to the overall market structure. You have to do this. Know your highs and lows. Know what your trend is doing. Put support and resistance on your chart. Make sure you are putting your support and resistance lines on your chart because you want to trade to them every single time, right? Let's just kind of move this over here. Watch carefully. I'm going to cut the chart and you're going to see a little bit of magic happen. You know that voodoo stuff that I do, right? Let's see. So we got support here, right there. I'm looking for the places where they actually strike each other, right? Here, there. We got one. I think there's one right here somewhere. Oh, well, this long flat one right there and another little zone here. And let's just see what happens with the price. Let's go. Oh, sorry. There's another one right here. Long flat one, right? This one is coming up and it's getting closer to the short-term trend. So let's see. Now you see how it's respecting this zone very nicely. It's going to dip down and touch this one just for a little liquidity. See, touches it right now. You have a bearish label shows up in my smart money concept indicator, right? Let's see, nothing else is touching just yet. Another flat area right here. A lot of resistance in this zone. But these levels, these lines that are being drawn out, they're very, very clutch. Okay, now just want to see why did it go down to this area. Look, it didn't quite make it. Let it play out. Are we gonna get there? Are we gonna dip down low again and then come back? We'll see. Got another one right there and right there. Some of these can be deleted, but it doesn't really matter right now. So I just want you guys to see how accurate this can be, and you can enter these movements using the Stochastic, right? Let's go right here. You see that you've broken through, right? You broke through your moving average. You get a nice green label. You can go to your pivot. When you get a hidden bullish, because you're in an uptrend, you get the hidden bullish. You're red and green. You're not taking this. Here, you're green here. You're lined up for the move. You are breaking just above, so you can always take this to the next, right? To the next level, right there. A couple of candles later, comes out, saves you, creates liquidity, and the market continues moving. So price analysis, trend analysis, very important. Understand your market structure. Put your support and resistance lines and use your indicators appropriately. They are there to help you. They are not there to tell you enter, exit. They simply tell you, hey, take a look at your chart. I think something's happening. This is what I see. Take a look at your chart and see. Are you above or below support and resistance? Are you too close to an area that you shouldn't be? All right. So everybody, keep that locked up. go ahead and get this Stochastic plus Caffeine Crush. The link is in the description below. Like and subscribe to this channel. It's going to do a lot for you. This channel is more about teaching you how to trade instead of just giving you indicators that are like, buy, sell, you get 50,000% pure profit. Because I'm not going to do that. Okay? Peace out, peeps.